Well, there's a lot of opportunities in healthcare for inside information because of the nature of the way drugs are developed. There's clinical trials that have a lot of milestones along the way, and the information that's produced in those clinical trials, which is supposed to be confidential, is worth a lot of money to investors if they know how to use it. And then there's also a lot of mergers in the industry. There have been a number of multi-billion-dollar mergers and acquisitions.
I can say without question that I've been thrown out of more meetings in healthcare than anything else, where I was asking questions that the CEO didn't like. Where is the leadership here to bring some stewardship and governance quality to healthcare?
Well, I think all of the companies say that they are enforcing insider trading policies and that their compliance departments are robust. But obviously, people are seeing opportunities in those meetings that you're talking about to make money for themselves. And a lot of it has to do with doctors and experts on the inside who are sharing the information they're not supposed to share.
Well, that's a
break exclusive. Blame it on the doctors.
Well, it's not just the doctors. I mean, there's sometimes going to be a multi-year period before these drugs get approved, either by a government or they go through the trials, and it's kind of gray what's public material and what's not.
Well, it's clear to all the company insiders what's material non-public information, and that's the standard for insider trading, that someone trades on material non-public information that they know is not public. And generally, people are told over and over, this is the line, you can't cross this line. And that typically involves the results of clinical drug trials, also any merger and acquisition talk.
Is there a process or struggle? I think of options. If you game a stock with options, everybody sees that, and they go right after the person. Is there a process in place to go after the physicians or the money people benefiting from these secrets?
Well, the Securities and Exchange Commission and FINRA and the Options Regulatory Surveillance Authority all have pretty sophisticated online surveillance of trading, and they can target specific traders once they see patterns of suspicious activity. So people think that they can disguise their trades in a small number, say 100 shares. The regulators have become considerably more efficient at ferreting out that type of thing.
I think that's really important to know that they're out there. Are you surprised by the allegations against Mr. Cohen's shop?
Mr. Martoma is the sixth person who's been charged in the last 3 years, and he has such a successful hedge fund and has such a 30% return average over the last 20 years. There are a number of people on Wall Street who used to work for him who've been implicated in Preet Bharara's insider trading probe.